Good evening, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for Tuesday, the 21st of March, 2023. And we're getting into, 6:45 p.m. Central Time, but if that even matters. Let me tell you, I don't wish anything bad on President Powell. He's going to have a rough night. What do you say tomorrow? His mandate is to fight inflation. Inflation is nowhere near his 2% goal. How could he not go 25 basis points? I think they can do that and more, to be honest with you. He will be asked questions, and it might even be in the statement about the banking and the failure of these banks that have happened. Do they think it's symptomatic of other banks that are going to have it? Is the system broken? Or mismanagement? I think it was mismanagement. But not every bank's mismanaged, and you have certain niche banks, and there's a problem for them. I mean, the small community banks deal with their local community. That's a niche. So I like Miss Yellen's idea, and the idea is proper that certain size banks down should have full 100% insurance on deposits. It will stop bank runs. It does not stop from fraud. It doesn't stop from mismanagement. It doesn't stop from craziness in the world. But no matter what the craziness is, at the end of the day, the Fed, the Treasury, they're going to make Americans whole with their money. You have to. The big boys, they're big. They have the diversity. They probably don't need it. So who's going to pay for that? I keep reading, who's going to pay? There's a cost. I'll tell you who's going to pay. Come on. You know how wonderful the banks are. You're going to pay. Do you think you're not paying for the FDIC insurance now? We hear the nonsense. It is their expense. Well, so is rent. So is electricity. So are the labor costs. This is just another cost. They build them in to their service charges, what they pay in interest out, what they can keep. It's called running a business. Get that insurance to those banks, shore that up, and now the niche banks can survive. And this whole nonsense, to a degree, dies off. Now, I don't know where the tier cut should come in. That's up to people that are much brighter than I am. But there's going to be a cut somewhere. I don't know that anything would have saved an SVB or not. I don't know. I do know that something's amiss. Bloomberg reported today that $219 million in loans just days before the bank went insolvent was made to insiders at the bank. We know bonuses were given out just before the bank closed. Does it sound to you like there's some mismanagement? Not to me. It sounds like normal bank dealing. Okay, so now how do you handle tomorrow's meeting? We have a real problem, okay? So the Fed's going to come out. If they don't do a 25 basis point cut, I think they're sending a message there's something really wrong in the banking system. It can't handle another 25 points. If they do, people have been bidding up this market. It's fairly rich. We've got multiples, 18 and a half. That's not small. That's a good multiple back in the bank, rather in the stocks and different ones. The naysayers have won the day again. Recently, since October, they've been buying. They got hurt on the big break in the market, but they've done very well since October, buying these breaks and taking advantage, and they have been handsomely rewarded if they know how to come out of the markets, all right? So tomorrow, I am assuming we get a 25 basis point hike. I assuming we get a Fed that is not super dovish, but not super hawkish in the meeting. The questions will be, everything's the question and answer period, and we get the dot plot. So the dot plot, everybody's going to focus on. Everybody's going to want to see, what do the members as a whole think? Where's the terminal rate, which means the peak? Where's a pause, if there's one in there? And where's the decline coming? That's what we're all going to be looking to see. That doesn't mean it'll turn out that way, because these things change and they're very, very fluid. They're ideas. They're where they'd vote to do it now. But at the end of the day, the only vote that matters is one man, the Fed chair. He doesn't have to listen to anybody. So what does he think? So we got to listen to that. Then one other element for you. Whatever he says, it's at 130 to 215, 220. Asia's closed. People are sleeping. They will wake up and react to it. In Europe, just add your 5-6 hour period. They're out to dinners. Their day is done too. You're going to get what I call that yin yang. It goes around the world, and we see if the world reacts differently than the Americans first react. The beauty is the S&Ps and a lot of the markets are open 24 hours a day that are futures-based. So you'll have a pretty good idea there as to what to see. I don't know. I have no idea how to go into it. So when I do that, I tell my clients not to go in. Pretty simple. First Republic Bank, up a whopping 30% today. I mean, it's a big move. 30%, $3. It was a $12 stock yesterday. It's nearly a $16 stock today. But does that chart look bullish to you? I know I'm missing something, but I don't think so. You still have lower highs, lower lows. You're under all the key averages here. The Bollinger Band could now go to 831. That's a possibility. It's better than $1.50 the other day. And are we embedded? Here's what bothers me. You know what embedded is. It's when the two numbers that make up the slow stochastic get under 20 and start going sideways. So as I come back on the trade, today both numbers under 20, day before, we've been that way. I will wave that the market is through on the downside for this round or maybe forever when the red line gets over 21. Until then, these kind of rallies continue to get sold. Do I have any real understanding of why Jamie Dimon is putting together all these banks to rescue this bank other than they don't want to see another bank go under? That's what I'm assuming it is. I don't know. But that's got to be the only thing. I can't figure it out other than that. But it's better that it gets saved than not saved if the bank's operating in a good business-like manner. You heard what I said. I don't think SVB was honoring a good business-like manner where day before they close they're handing out bonuses. And today Bloomberg breaks a story that $219 million in insider loans were given out. No, they just didn't give them the money, thank God, but loans, okay? A bank that's failing and they're giving out loans to the insiders. And this is a bank that obviously there's a reason why it was allowed to fail so fast. Schwab, still not much of a bounce here. This is a great company, and so far not a bounce here. So I think that you're looking still at a market that while you're looking at the stock indices come up, individual companies away from banking, I get that. When you're looking at the banking, it's not so good. Now, the gasoline fund. I think we're getting into the time frame now where if the market's going to get that spring-summer rally, it's got to start making lows, and that might be what it is. There's plenty of resistance at 58.19, the 100-day average right into the 18 of 58.20, and then again at 59.74. We've broadened out that band in there, but we'll see if we can get that bounce. Sooner or later, the demand's going to come up. It's already March 21st. The kids get out of school in 2.5 months. You're going to be driving with them. Tesla, great news. They no longer have junk bonds. I thought that was big news. So here's a company that, we know how great of a company is, but now it's back into the bull mode. You have to get back under 176.35 to convince me of anything but that. The target door is open for numbers up there. It is not overbought, trend up, bias up, and so on. Certainly tomorrow's reaction to the Fed can do anything in the market, but on its own, that chart looks pretty good. In XLF, this still looks terrible. This is your financial services. It's fully embedded. Until the red line closes over 21, I think the bears are in full control. I think they're selling these rallies. Get that over 21, I want no part of it being short anymore. So until that's it. Would I tell my clients to go into financial services in front of tomorrow's FOMC meeting and then the Swiss National Bank and the Bank of England on Thursday? I think I'll watch a little bit. We'll get all the European banks first thing in the morning, so the door will be open come Thursday, my normal time that I start really looking at the markets around 9 in the morning. I'll be very comfortable looking at them then. In XLI, a bear market bounce, a lot of resistance between the 18 and the 100 day, but the market now has taken out that high, so this break is formally over. And I was telling my subscribers that were with me this morning how many of the charts of the 40 that we had finally gotten to the point where, I'll show this to you here, it shows better than I can talk. Lower highs, lower lows, suddenly a pause, oversold. Now, if you take out this high, what happens is you've broken the pattern. It's not a sign to be long, not in my opinion at least, but it is a sign to no longer be short. And that's a big thing. And I had that happening on chart upon chart today across the board. In the semiconductors, I would never tell a client to buy an upper Bollinger Band. It's that simple. Is it bullish? Yes. Is it overbought? Definitely yes. In the home builders, finally they came alive. You saw that the sales of existing homes up 14.5%. They were looking for a 4% gain. That's dramatic. And home prices have actually dropped a bit, and home rentals have dropped a bit. So housing, I think the Fed can tomorrow declare a victory lap in that area. But where else do they declare it? Because general inflation, core inflation as well, is nowhere near their 2% target. And out is, they don't need to get back to 2%. It's a different time, different world. Maybe 3% is the number. Maybe 4% is the number. I don't know what they're going to say. But anything they do tomorrow, if he deviates too much, the markets are either going to get scared or they're going to roar. I don't know which one of the two they're going to do. In XLE, I don't want to be short anymore. Same thing that I just showed you. Let me walk you back to this. Here's a market not embedded. Pattern, lower highs, lower lows. You break the pattern of 78.40. You've broken the downtrend. You had been under the Bollinger Band. You moved sideways. I didn't say it's a buy. That's the end of the downtrend for a guy like me. In GLD, the market was running the upper Bollinger Band, and it's finally under it. Now, are we embedded or not? If you look here, both numbers are over 80 today. Both numbers were over 80 the day before, and both numbers were over 80 on Friday. What about the day before? No. So we have Friday, Monday, Tuesday. Now you're embedded. You close near the low of the day. A secret. Generally, when you close near the low of the day and you're starting to arc down that much, give the market a few minutes in the morning, because even a steady opening drops that red line a few points. You may no longer be embedded. Remember, I didn't tell you that. Okay, SLV. The market fighting a battle right here at the 100-day average up there, but silver's gotten stronger than gold. It is overbought. It's in an uptrend. I know it, but it's a stronger chart now than gold. And in the copper, it came alive. It went to the depths of you-know-what, found itself some support here, and has come back into the resistance of the 100-day. Now, I warn traders, if you're one of my people, I'll give you another one. First time you get under a 100-day average, you generally don't stay under it very long. You stayed under it a little longer than I thought, about 5-6 days, and you're challenging it again. TLT. I don't know what to do with this, or BND. I haven't the slightest idea. And in the currencies, I don't know what to do. I realize that there's so many analysts that have come out. They want to be bullish Europe. They want to be bearish in the dollar. Ultimately, they think that Japan will get away from this easy monetary policy. I can go through all that. But do I really believe that I should do anything in front of a market-moving event tomorrow? I don't think so. I think that the smartest thing you can do sometimes as a trader, not an investor. Remember, there's two hats, Jekyll and Hyde. As a trader, you save your ammunition to pick up the scraps. You don't stand in front of that train track and you go, I can just dodge it right in time. You won't. Same with FXE. My work says you're overbought, you're at the upper Bollinger Band. Bye-bye, the money's off the table. And I know what you'll tell me tomorrow. Ira jumped up here. I know. Doesn't matter, okay? If you don't take the high percentage things to do, you get yourself in trouble. I know you want to be the hero in the market, but That's how they build the Vegas casinos. You'll have all that money on the crap table and you're going one more and it's gone. We've all done it. Okay. So what about what you should do? Well, I want you to join me in the morning. It's that simple. You know, each morning I start at 9 recording right away, and I'm reviewing at that point chart upon chart upon chart. And as we go through these charts, what happens is we start trying to get them going we look at the daily. Well, first we're going to look at the fundamentals of the day. I always start you out with the day's news, what's come out, what's the impact of it, and what about later in the day? Are there events? I'm just showing you some markets. I rotate these all the time. We'll cover at least 40 markets. And I say at least because I'll put on daily and weekly charts from time to time for you. Because I'm always looking to see if I have a new signal, is it fighting the weekly signal or are they in sync together? We build the charts. They'll look like that. They have more lines than you're seeing here. I explain them in detail and explain why I'm coming up with the trade. I promise if you're looking for me to be wrong, you're going to be happy. I am going to be wrong. For those of you that hate when I'm right, you're going to be very unhappy because I will be right at times as well. It's well balanced, but control. That's the whole thing. Knowing the risk before you enter the trade. Why are we entering the trade? We talk it right through. So how do you get it? It's really simple. Just go to our website, iraepstein.com, and under the word research. You can also click right up here. It'll take you right into the area so you can join me there. I'm Ira. You have a great day. Talk to you all when? Tomorrow morning. Take care.